All right, hello everyone. Let's do a sound check real quick. Ooh, geez, I'd be better off without a camera today. All right, test 1, 2, 3, 4, 5. Don't make me sing. Just gonna do it. I need to find my clicker. All right, we got a sound checked. Okay. Wow. All right. Oh, thank you, Chris. Appreciate it. All right. Yeah, I wasn't checking YouTube. I was checking on the GoToWebinar. Let me just make an announcement real quick to my group. Let them know that I am live. I think there's some confusion there. All right, let me get this shared and then we'll start officially. Not a practice, yeah. Hello, one day is, let's try that again. Hello, one day is Thursday, April 24, 2025. This is the week and charts. Obviously, I thank all you guys and girls for attending. I appreciate taking time out of your busy schedules to be here. So, what are we going to talk about? Well, obviously, current market conditions. I have a lot to say about that. Your favorite stock and crypto picks, your questions on trading. If you want a crypto pick, just put in USD after the crypto pick so I know which one it is. And I know it's crypto, not stocks. We'll do crypto and then stocks next, but feel free to punch in your symbols now. This week, I'm going to focus mostly on the methodology in action, given the nature of the market and everything that's happening. I do have some million little things I want to get into, but I wanted to save those so where I can give them proper time. Also, last minute, I realized I wanted to talk a little bit about the death cross. I do have an article on my website at davelandry.com on that I freshened up or actually just kind of republished. I'm not sure that a whole lot has changed in it. But anyway, I'll discuss a little bit about the death cross in a few minutes and obviously your questions on trading. Business disclaimer screen, as you know, you can lose money trading, or as often summing up, all predictions are about the future. And a lot of stuff can happen between now and then. That comes from my buddy Greg Morris. All right, there's all my contact information. Last week, or actually a couple days ago, I started a Substack. So davelandry.com.substack. I'm sorry, davelandry.substack.com. I'm not used to saying that just yet. But there's all the other stuff. You can also reach me at davelandry.com. I have a Facebook group too. That's members only. You have to be at least a gold member of davelandry.com. Little soft sale there. We got a really good group, if I say so myself. All right, let's talk about the mystery charts and the methodology in action. This was not a mystery chart because I showed it while it was still live. And usually with the mystery charts, I like to show them before they trigger. In this case, it had already triggered by the time the webinar came around. Anyway, the mystery charts so far, I think 100% have come directly from my trading service. And you can find those at davelandry.com/archives. And you can also find them on my YouTube channel. You can find the newer ones on my YouTube channel. Anyway, start with a nice uptrend. We made a minor double top, and then it sold off fairly hard. Now, this is kind of a TKO, and that's what I published it as when I made the recommendation. And it's kind of a TKO over a couple of days, so kind of use your mind's eye and kind of blend the bars together. I guess a 3-day chart would probably show a little bit better the knockout type of move. And it's also kind of a double top knockout. We have a minor double top that's like you get a little peak, a couple little 2 or 3 days of trading in between, or 3 days I think is ideal, and then another little peak. And minor little double top like that makes people think that the market might be topping out. The eager shorts are usually sucked into something like that. And if the market has a TKO move, trend knockout move, it tends to shake out the nervous Nellies, the people who buy late in the game, the people who buy those brand new highs, think it's going to go up forever. And I'll talk about buying highs in a minute. There are times when you can actually do that. Anyway, so nice little knockout move. There were all the parameters based on a hypothetical 100K account, although I do take the trades, as I'll show you in 1 second. Entry was there. Stop was way down here. The IPT was up here. So it was a near miss on the IPT, which called for a little bit of discretion. And we'll talk about that right now. Using a little bit of discretion. Keep in mind, discretion is not throwing caution to the wind. It's not abandoning the plan. I remember one time I had a stop on a stock, and it was at 9, okay? And the stock was doing fairly well, and it came down and it hit that stop technically. But when I looked at the time and sales, I really didn't see any significant trading there. I think there might have been 100 shares hit, if that much. And I don't know how that print of 899 got on the chart, but technically and mechanically following my plan, you would have been stopped out. Now, I personally didn't exit on the trade. A little stop nick like that, that's kind of an obvious form of discretion. And you don't want to throw caution in the wind, of course. But anyway, I remember doing a webinar on it a week later, and someone said, well, how come you didn't have the stop set at 899? And I'm like, well, nobody's that good, okay? So, I mean, I'm good, but I'm not that good. So that's why sometimes these IPTs could be missed by just a few cents, because you don't know exactly where the market's going to go. I thought it had the potential to go there, but obviously it didn't quite make it. So anyway, there's a chart again. So we had a near miss. 31.25 was the IPT. Now, when it comes to these discretionary calls, there's a few things you need to ask yourself. How far has the market moved, okay, and how fast? Now, if it's fairly close to the IPT, and especially if the markets move really fast, in this particular case, it's 1, 2, 3, 4, 5, like 6 days, 6 trading days, and you're already to the IPT, and that's fantastic. That's a pretty quick move. You know the market's already oversold when that happens. So that's when you need to think, okay, I don't quite have that IPT, but I think it's worth taking. Don't look the gift horse in the mouth. And of course, how close are you to that IPT? So how far would be how far the market has moved over how fast. So those two kind of work together. So in this case, it was about 4 points, I guess, or 5 points, five or 6 points in 5 days, 5 or 6 days. That's pretty significant move for a $20-something stock, like a 20-30% move over the period of time. So don't split hairs when that comes to this. Now, I noticed on my exit, I did exit when it was right up at that peak. It didn't stay there long, so it would have been tough to get really, really close to the IPT. But what I did do was I mentioned to my Facebook people that, hey, this thing is close enough. Let's think about getting out. And then unfortunately, the stock had come in a little bit, but by the time I exited. So, and I was a little late on the entry on this one. I guess I wasn't paying careful attention. I didn't have my alarms or alerts set properly. And a lot of times I'll use a stop entry order, and I didn't have that set. So I got a little bit of, it's not slippage because it was my own mistake, but I didn't quite get in right where I'd planned. Anyway, so on the trade, I made $390 on half, okay? So instead of making a full $1,000, 1% on the entire account, right? And this is from my model account. I have an account where I model the trades out. I also take the trades in other accounts, but just for the educational purposes, I like to show the actual trades and how I played them personally, good, bad, and indifferent. So you'll see that, like in a second, I'll show you something that fat fingered, just to show you that, hey, we're all human in this game, and sometimes we're not absolutely perfect. Anyway, so I'm okay with that because the money is on the second loaf of the trade, and should this trade stop out, at least I was able to get something out of the trade. Anyway, here's another one. This is an update. Now, one thing I was thinking about before I went live, and I added a couple extra lines to these charts, is when you're looking at a setup, you want to put as much of the bigger picture behind you. As I've said before, I knew a day trader once, and he would look at monthly charts and weekly charts and daily charts, even though he was only in there, I guess you'd call it scalping, over a very short period of time. In some cases, I think he held a little bit longer. But he made sure he had as much behind him as possible. So I always remembered that. And that's a big part of the swing to intermediate term trading I'm doing. So most of my setups are pullback related, such as the TKO and things of that nature. Classic Dave Landry there. But anyway, it is important to look at the bigger picture, okay? And so, and a lot of times bigger picture technical analysis, as I preach, you don't necessarily want to rush out a trade, bigger picture technical analysis in and of itself, but it works as a really good backstop behind your trade, okay? So in this particular case, the stock makes all-time highs, comes back in a little bit, tries to make all-time highs again, and then comes back in once more and trades mostly sideways for a significant period of time. It then makes the bow tie to the downside, going from uptrend proper order, 10 greater than 20 greater than 30, 20 and 30 are exponential, 10 is simple, to downtrend proper order, 10 less than 20 less than 30. That's illustrated down below, okay? Now always look at your charts, even if you have the best indicators in the world like I do. Make sure you're looking at your charts. So you can see the bow tie was a little bit sloppy, but that's okay. I called this one a first thrust. And first thrust is when you have a sharp thrust down, especially after it kind of tops out like this one did. Now remember, and I don't want to talk too much about this because I think I say it every week, but my brand of technical analysis, the way I look at technical analysis, is you're looking at the charts to read the psychology of the market players, okay? So at brand new highs, everybody's happy. When the market begins to drop, those people who bought at those new highs are beginning to lose money. And then the further it drops, the more you go back in time, people like back here, for instance, are beginning to lose money. So that's a lot of trading and a lot of people possibly looking to get out of the market. Now, a lot of times people won't sell on the way down. This is something I was talking about not that long ago. What they'll do is they'll wait to see if the market rallies. And that's why sometimes the pullbacks work fairly well on the short side, is because the market begins to rally and people begin to sell into that, and that selling starts to hit the market, and the market sometimes rolls right back over out of that pullback. So those pressures get greater and greater as the market drops further and further. So again, remember there's a psychological backing behind everything that I do. And by the way, it needs to be conceptually correct. I was watching a video from, these little kids pop up on YouTube, and yeah, I've been trading for 2 years, and I'm the greatest trader in the world, and I'm blah, blah, blah. And I was a little shocked that one of the guys was doing something that was conceptually correct. I'm like, wait a minute, he might be onto something. But anytime I digress, I know. But anytime you look into something or think about doing something in the market, just make sure it's conceptually correct, okay? So on corrections, certain things happen, like the TKO. Let's talk about uptrends for a second. In an uptrend, you have that knockout move that knocks out the nervous Nellies, that knocks out the who else is a knockout? Oh, it attracts eager shorts, okay? And the selling of those two kind of pushes the market down, but all of a sudden the market goes right back up. Sometimes those people who are buying at the new highs might buy back in. The shorts might be forced to cover, but in a lot of cases, the shorts won't cover right at this new highs. They'll wait to see if it keeps on going, and they might get squeezed out much further. And that's how these markets sometimes go parabolic. Anyway, I didn't want to go into a conversation just about TKOs, but I want you to understand that it's the psychological backing in the bigger picture technical analysis that's very important when it comes to trading. Anyway, entry was there, stop was up here. It kind of went for us a little bit initially, and then it turned right back up. There's an old market adage, all shorts will go against you initially, And boy, it sure does seem like that is the case quite often. But anyway, we did hit that initial profit target. At that level, we take half, and the stop is brought down to break even. In this particular case, because the market dropped a little bit further, we did drop the stop a little further, and we got stopped out on that one on yesterday, or yesterday, I should say. Actually, it was the day before. Anyway, this is what it looked like. That's the first loaf. And the second loaf, unfortunately, we only made a little bit of money on that. Now, in an ideal world, that second loaf runs for a long, long, long time. Maybe the CCL right here, which we'll talk about in 1 second, which is looking a little bit better in the second loaf, that one might pay off. So you're trying to, as I often say, you're trying to catch that initial profit target, and that keeps the lights on. And you have to, no matter what type of trading you do, I'm a firm believer in the fact that you must position yourself for the potential for longer term gains. In fact, the secret to trading, if there is one, is establishing free positions, because sooner or later, one of those free positions, free rolling, as we now call it, could turn into the mother of all winners. And that's what we're playing for, those occasional outliers. Anyway, here's the options trade. I'm not going to spend too much time on this because we talked about it in weeks prior, and I found I got myself pretty confused when I tried to relive all what I did here. But the bottom line was two things. One, you can buy deep in the money puts as a substitution for stock. So in this particular case, in order to short 200 shares, I would have to put up $15,000 of margin, okay? And in this particular case, I was able to get a couple of options for $930. So my risk went from 2% to 1%. Now it's a little bit more complicated than that because you got to roll down, you got to roll out. There's all kinds of other things. And as I say, options, lots of moving parts. The other cool thing that I think is cool that I was able to do is before I put up that $930, I noticed that these slightly out of the money options were only trading for 25 cents, okay? That's $25 a contract because it's 100 shares. And I figured before I put on my deep in the money puts and put up $1,000, round numbers, I would take this little trade for $50, okay? And you got to be careful, I know, because you can't get a little bit pregnant, right? But I figured that at $50, okay, if it doesn't work out today, I could sweep it under the rug and then figure out my positioning. And fortunately, it did work out. And I forget the math. I think it was $140 if we add all that up for a day trade. So that kind of helps to, and again, keep the lights on. Now, there were lots of other things in here like roll downs and all, and the spread experiment I talked about last week. Spread experiment, it worked, but what I didn't like about that was I wasn't sure what to do as far as like hope, not that you should base your trading on hope, but it's like, well, what do I want this position to do? Well, I want it to go down because I have a long put, but I want it to go up because I have a short put. So ideally, I want it to go up for a little while, and then I'll cash out of my put. Then I want it to go back down. And before you know it, it's like you're wanting all these different things, and you're putting yourself into a state of regret, a potential state of regret, or state of confusion, however you want to look at that. So not a good thing. And then I did some fat fingering on one. Fortunately, it only cost me literally $5. And rollouts and exits. Now, after all, I did all this stuff. I still have one put left over. So even though we're stopped out on the outright position, I have one put left over, and we'll see how that works out. It's going to expire in a couple of days. There's all the trades if you want to take a look at them. And again, if you go through last week's, or it was 2 weeks ago, weekend charts, I went through, I think, nearly all of that trading, explained how everything shook out. So a lot more stuff that. But anyway, the main thing there to know is options as a substitution for stock, especially on the short side, can work out nicely. Now, can being a keyword in that sentence, I would imagine now that the implieds have gotten so out of control, it's going to be a little bit harder to make it work. But if you go deeper to the money, some of that fluff, so to speak, the extrinsic value should come off of the options. Is there a delta for extrinsic, or they just call it extrinsic? Anybody know? All right, here's the mystery chart. Here's the mystery chart follow up. And again, like I said, right before we went live, I drew a few extra lines on the chart. Now, just real quick to back up for a second, we've got the proper order illustrator down below, and it's nice and green here. Okay, it looks fantastic, but you also need to look at the chart. What's the chart doing? Well, you can see the chart begins to lose steam. It did try to make a new high here, then it came back in, and the net move is nil to negative. So it really wasn't doing so hot. Okay, then it shoots up to all-time highs. Like, okay, well, maybe it's breaking out again, and then nope, it rolls right back over. Okay, so once again, you've got that bigger picture backstop behind you, that bigger picture technical analysis backstop behind you. The market is rolling over, making a big top. That's further confirmed by a bow tie. By the way, the bow ties, the designer intent for that was to catch a more gradual rollover in a market. And what's amazing, and I know I'm a nerd, but sometimes you can get a signal fairly early into that rollover. Now, if you're into classical technical analysis, obviously this looks like a bit of an inverted saucer and handle or inverted cup and handle. And that's, again, bigger picture technical analysis working for you. Anyway, entry was here, stop was up here, IPT was down here. When the IPT is hit, we bring the trailing stop to break even on the remainder. So barring overnight gaps, which do happen, unfortunately, but barring overnight gaps, the worst you could do is break even on a trade. And now you're free rolling, so to speak, and you have the potential for a longer term home run. And that's where the money is. Anyway, the stop has been trailed down a little further. And just by the way, I don't know to say this quite often, but on that second loaf, that trending loaf, which hopefully turns into a longer term trend, you begin to loosen that stop up over time to ride out deeper and deeper and deeper and deeper corrections. Okay. And a lot of times it's by doing nothing. Let's say the market moves 25 cents in your favor. Well, you just leave the stop where it is. And now your stop is widened by 25 cents. I call that keep the change. The other thing that I often do, let's say a market moves $3 in your favor, which is great, right? Instead of moving that stop down $3, I might only move that stop down $2 or up $2 for longs, obviously. And I call that gaining ground. So you're gaining ground. You're not gaining ground on a one-for-one basis, but you're giving it more and more wiggle room to possibly correct and keep on riding. Now, I've ridden out some ugly corrections, and then the market has turned back up. Fortunately, I've also ridden out some ugly corrections and gotten stopped out. You kind of have to take the good with the bad. When that happens, as I often say, all trades will eventually end badly. You have to look at how much you made on the trade and not how much you lost, so to speak, on the drawdown. So drawdowns are open profits, and I've said this quite a bit too. Dennis and Eckert, and I think it was Dennis, and it was one of the turtle books, and I want to say it was written by Fate. Well, that's the only turtle books I've read. That's the only one I'm only going to read a book about somebody if part of the program. That's kind of my feeling on those turtle books, as opposed to the people that try to capitalize on what they did by writing books about them. Anyway, that's a whole nother story there, and I'll probably get myself into trouble if I express more feelings. But anyway, long story endless, it was Curtis Faith that said Dennis treated open profit drawdowns a lot differently than just flat out open losses. So if you had an open loss in a trade, he would look at that pretty hard, like, okay, why are we not getting out on this? Where's your stop? Did your stop get hit? What's going on? And he put the trader under a lot of scrutiny. But if you had an open position that you were making tons of money on and it drew down significantly, as trend following will do, and that's one of the parts. That's one of the things that they don't tell you in the brochure, right? That occasionally it sucks, but it does happen, and that is part of the game. And that's why you can see in this case here, the open profit drawdown, if we hit this stop, would be significant. Go back to that TPR. That was a lot of money to give up. And believe me, that kind of sucks, right? But it comes with the territory. And if you're going to catch any longer term trends, okay, you have to be willing to give up some open profits. Anyway, so there was $1,000 on the first loaf, and that's based on a mark to market on the second one. So not much more than $1,000 so far. Let's just see how it all shakes out. Okay, now as I was putting this presentation together, I got to thinking something I hadn't said in a while. And a lot of the presentation is based on, for the TFM 10% stuff, is the fact that it only works because you're avoiding the occasional diaper change moment. That's occasionally when the market gets absolutely whacked. And when I designed that system, the idea was to get you out of trouble before things really got nasty. And knock on wood, you would have avoided every bear market in history. And I keep forgetting when I first published it, but it's probably been out, I don't want to exaggerate, but maybe 10 years? I don't know. It's been out for a while. And fortunately, so far, so good. But market timing is less about beating the market and more about not letting the market beat you. So the only reason, again, something like the TFN 10% system works, or any other market timing for that matter, is because occasionally the market has a 50% or more haircut, okay? And getting out of the way for the majority of that does help your longer term performance versus buy and hope. Anyway, so this little arrow here needs to be dropped down to there, okay? So it's 2 bars of Landry light, and then you enter on the close. So that needs to be fixed. But anyway, there's the rules. I'm not gonna spend a lot of time on this because we talk about it quite often. The only thing I do want to show you is that we did have a recent sell in the S&P 500, and so far we're back above those levels. Now, it was very hard for me to take that sell signal. Now, if I take the sell signal, all I'm doing there is I'm pulling my girls' leftover college funds, and I'm resisting getting in there and doing a lot of trading with them, and the accounts they're in, I can't do a lot of that anyway. I don't want to just leave it all alone. So what I'm doing is I'm just using a little market timing to get them out of the way. I think I've only pulled them once before, and that was right around the pandemic. Maybe once before that. I have to think about it. But anyway, so it was hard for me to sell on that day because I'm like, this market is so oversold. Maybe a lot of this stuff is just news related. And I did a lot of confusing the issue with facts, and I'm like, nope. I've got to follow the system. I've been following the system for quite some time, and I'll keep following the system, knowing that the market might bounce right back. Okay, well, shit happens. Okay, that's just the nature of following a system. Anyway, here is a spreadsheet going back to the 20s, late 20s. And if you look at the diaper change is how much the market dropped after you got out, which is pretty amazing if you think about that. So in the 20s, late 20s, you got a signal before the depression really kicked in, right? And the market lost 83% of its value afterwards. And you start talking about market timing, people are like, well, that was then, this is now. It's like, well, hang on a second. The NASDAQ lost 70-something% of its value back in 2000. People don't realize that. Just go in and look at the charts if you're ever confused about this. And I've told people before, as I mentioned in one of the books, it's like I explain to them, they talk about, oh, well, it'll always go back up. And I'm like, well, that might take 25 years or more. And they don't believe me. It's like, okay, well, just look at the charts. I'm not going to argue with you, especially if we're getting free drinks at a cocktail party. But anyway, there could be some really ugliness, and there could be some extended periods where the market does not always go up. And I don't want to digress too far, but and I know I've said this before, but a lot of these people who make good money being money managers, okay? Because I talked with a friend of mine a while back. He had another friend of his that was a money manager. He's like, okay, we're gonna put you in this or whatever. And so he gets his portfolio, and he thought it would be like all this stock picking and all these things going on, and they just put him in some fund and forget about it. And his friend has moved on to find more clients. So they're more asset gatherers, and God bless them. But I think the reason they can have decent careers and retire, you know, is because you could have a pretty good run. You could have that 25-year period where the market goes higher. And by the way, I saw someone recently, and maybe he's got a good argument. I don't know. But his argument was there's never been a 30-year period where the market wasn't higher than where it started. I'm like, okay. So his point was that if you had a young person, kind of like my daughters are, they're still pretty young, maybe I should just leave them in with the buy and hope. But the trader in me won't let that happen. And if you think about it, how many 30-year observation periods do you really have from a statistical standpoint? I don't know a lot about statistics, but I do know, well, I know statistics are worthless. 75% of all people know that, but I think that's Bart Simpson. But anyway, I don't think that's enough observations. If you observe something, once or twice, that's not necessarily observation of everything there is. My parents were kind of like that. If something happened to somebody once, then it was like, okay, we must, that could happen to anyone or whatever. It's like, well, it could, but the odds are pretty low because you just have one sample you're looking at. You don't have a bigger picture sample to look at. Anyway, I don't think the sample size is big enough, is what I'm trying to say. Show you how little I know about statistics. But markets aren't normally distributed. We have these so-called fat tails. That's why statistics don't work in markets. Anyway, you can see pretty serious diaper changes in here, 20, 30%, 40%. And then we had 44% and then 52% in the last couple of bear markets. The pandemic signal, if you look at that signal, it got you out, okay? Like here, the market dropped hard, okay? And then it came back up and got you back in here. So it actually got you back in higher than it got you out. So technically, right, that was a whipsaw. That was a wasted trade there, but not so much. As I've said 100 times, I had a friend of mine, and he was near retirement, and it was killing him every day that market went down further and further and further and further. I would imagine he would have slept a lot better and wouldn't have aged as much knowing he's that close to retirement if he'd have gotten out and gotten back in and maybe took a small haircut overall as opposed to trying to live through a 30% drawdown. So it happens, but again, market timing is less about beating the market and more about not letting the market beat you. Now, so far, I was a little surprised at this number. I thought it would be a little smaller, but so far from the exit, the diaper change moment, now that's the low, okay, has been 5%. So a 5% drop in something like the S&P 500, that's a fairly significant drop. Anyway, so here's the diaper change moments. And you can see the 70s. The 70s were abysmal. I was not trading then. I do have one or two clients that were, and I respect them a lot because I can learn a lot from them. Anyway, you can see that's crash of 87. And again, every single bear market would have gotten you out roughly at about 10%. Now, this last little signal, the losses were a little bit more than 10% because of the way I did the research on a calendar basis. So you don't exit until a Friday, which that might bite me down the road. But I didn't want to change a system during the heat of battle. As Greg Morris says, that's the worst time to change a system. So far, so good with the system, so I'm continuing to follow it. There's a 2000 bear market, and there's the 2007, 2008 bear market. You can see the market dropped 50-something percent, 55%. And that's for a 50-week high. If you go back a little further, it might actually be a little worse. So that's pretty ugly. And again, anything above this 10% for the most part, for all intents and purposes, you would be out of the market given the system. That was kind of the whole idea. And then we had a little spill back in, was that 2019? That was the COVID one. And it doesn't look like it, but if you look down here, you can see that's a 30% drop-ish, okay? And that's a significant drop. To lose a third of your money over that short a period of time, especially if you're near retirement, that's not a good thing, right? Now we're with the question mark, okay? How far will this signal go? I hope it's a whipsaw, okay? It might not be though. So this was a signal to cues. Again, we talked about this ad nauseum, so you can go back and watch the weekly charts on that. Now this one was kind of cool because it gave us a little bit. This is kind of like the designer's intent. I want to be out right around that 10% line, okay? Now my whipsaw filter, the 50-week moving average, can sometimes muck that up a little bit, but it does often keep you from chasing your tail by getting out and then getting right back in. But anyway, this one's held a little truer to the designer's intent of avoiding the diaper change. So it's only 3%, but that's 14.20 points. In this case, only had 100 shares on, but that's still a $1,400 drawdown. That's good money. So far so good there on that. Any questions on all this? I'm kind of rushing through it all. All right, the Landry 100. I'm simply just buying stocks as they're making new highs. Unless you're in an inefficient market like crypto and everything's going straight up, I would recommend you not just buy new highs, or if you're going to buy about 100 of them, okay? And we haven't fully fleshed it out, and I don't know if statistics, again, would be valid, but maybe there's a number smaller than 100 that would be big enough to make this work. But I figure with 100, you only have 10% of the account in each one, okay? Or 1%, wait. I guess it'd be 1% in each one. So yeah, 1% in each stock. So if one of them blows up, as they occasionally do, not a whole lot of harm is done. But if you're only doing a few of these and they blow up, then you're in a lot of trouble. And I think with 100, it guarantees that you occasionally will catch a home run. So even in this crappy market, this little biotechnology, okay, again, we're buying at brand new highs. It's had a pretty good run. Now notice that it did have a pretty serious drawdown, okay, after we bought. And that's what happens a lot of times when you're buying new highs, is you end up, buying the high tick of the day, of course, and then the market comes back in. But so far so good, up 200 and something percent, 230% on this particular one. Now again, this is like a proof. This is a proof of concept. It shows a lot about momentum, how momentum can occasionally end badly. I have no money management in here. If I was doing this with real money, and I did a little real money experiment with it, I am taking profits at 100%, partial profits at 100%. But if I were to someday run some sort of bigger money on something like this, I definitely would put some money management in. But in order to keep everything pure and just play the momentum game, kind of the proof of concept again, I don't put any money management in. And when these particular stocks start looking a little ugly, I take them out of the list. I also treat cash as an asset class. You can't see it, or you squint your eyes, you might. I think there's 70 stocks in here. So as they're stopping out, I'm not finding as many new stocks to go in. And so the list is beginning to become smaller and smaller. And what could eventually happen is you could end up mostly in cash in a bear market, should that happen. God forbid, right? Anyway, another cool thing about it is you can see gold stocks, okay? Well, what's hot lately? Gold. About the only thing that glitters is gold, right? Lately, at least. Excuse me. There's some defensive stocks in there, such as beverages, some kind of boring. It's like, oh, I don't really want to put like a Coca-Cola or whatever in here. But it's like, well, that's the only thing that's going on. Let's just continue to follow the little idea here and see what happens. And then there's a couple of biotech stocks in here. And biotech sometimes is one of those areas where they can have some sort of excitement in the sector and individual issues, especially, not so much the overall sector, which is not performing well. We'll take a look at that in 1 second. But there can be some excitement in some of these companies, and they can trade contrary to the overall market. And down there's some grocery stores, something you probably won't get rich on trying to trade, but it's the only momentum that's out there. Now, one thing I would caution you, and I know I'm showing you this momentum list, one thing I would caution you on is playing the relative strength game, unless it's something like a crazy biotech, like the TOI, it's going straight up, or gold stocks. But in general, you want to be careful chasing relative strength in a down market like we are in now. Anyway, just a few random thoughts we talk about each week. Random thoughts would be momentum ends badly. Relative strength in a bear market is okay, but they eventually will find you. So those grocery stores and those defensive stocks in here, I'll probably eventually be taking them out at a profit or a loss. I don't know. Maybe a loss. That just, it seems like it happens. But something like gold possibly can run a lot further, especially if the bear market continues. Again, it's a great way to see money flows, and cash is not trash, and that's why I treat it as an asset class. That kind of rhymes, doesn't it? Anyway, we had a recent loss in the S&P 500, and also the Qs, and also the Nasdaq, and we can look at those on live charts. Death cross is just simply the 50 dropping below the 200-day moving average. Media gets all excited for the death cross. It does have some merit, but it doesn't have merit as far as a mechanical system testing out. So the golden cross would be 50 coming back above. So if you bought and sold based on the crossings of the 200 and the 50, and I think Rob Hanna, I talked to him a while back on this, is a very slight edge. It's not a tradable edge. It's like a 4% edge. Not worth it trading. However, with any momentum indicator like bow ties or the TFM 10% system as far as getting out of the market, Landry light, and all these other great things, the magnitude of what can happen based on that momentum indicator can be substantial. So I put the diaper changes down below here so you can see how far the market has dropped from its peak. Now, the death cross wouldn't have gotten you out. Might have been a little late to get you out in something like the pandemic or whatever because of that's such a spike lower. And I'm not saying use a death cross for timing. My point is that it's the magnitude of what can happen below that death cross that's important. You could have a 50% haircut or more below that or any other type of momentum indicator. So obviously we have the recent death cross and we don't know where that's going to take us, but it's worth noting. All right, any questions on all that? All right, let's shift gears and hop into crypto. And then if you guys have any questions, obviously let me know. If there's any crypto pairs you want to look at, let me know on that too. Okay, so here, let me clean this up real quick. So we take a look at Bitcoin, okay? One thing interesting in Bitcoin is that we do have some Landry light developing. I'm gonna get it set up in the background for you so I can flip it over or maybe merge it in. Let's see if I can merge it in. Let's see if this will work. Oh yeah. All right, how cool is that? So we take a look at Bitcoin, we take a look at the Landry light, which I'm kind of amazed at how great it is. I know I'm a nerd, but it's just a cool thing. And the 30 EMA has become my favorite exponential moving average. I know you want to party with me. One thing's interesting is we are getting some Landry light lows greater than that 30. So we got 1, 2, 3, 4, and down here you see the number 4. So it's 4 bars of Landry light. As a general statement, you never want to buy a market when it's below the 30 EMA. If I get hit by a beer truck tomorrow, make sure you write that down so you remember that. But you can see, for the most part, Bitcoin's been below that 30 for a long time, and it's lost a significant, about 25, 30% of its value during that time. But now it's beginning to improve. Now we do have a lot of overhead supply to deal with, okay? Overhead supplies where people bought above the market, okay? So all these people might be looking to get out at break even. We'll see. So it is improving. I wouldn't rush out and buy Bitcoin just yet. I'd like to see it clear this overhead supply. I think now, especially, you have to treat Bitcoin more like a mature market as opposed to a less efficient market. Now, the one thing that I'm kind of excited about is that early on, my hope, I know hope in one hand, you know the other, but uh, my hope was that Bitcoin could trade contra to stocks. So if stocks were going down, maybe we could buy some Bitcoin because it's going up. Okay, it could be like a flight to safety type of market. That didn't happen. There's been a strong correlation between Bitcoin and stocks, and I thought that was kind of an interesting thing. But hopefully they can decouple, and we could treat Bitcoin independently, kind of like gold right now. It's decoupled from stocks because it's acting a little bit differently. People are in general like, I don't want no stocks, but I wouldn't mind a little gold. Maybe a gold stock would be all right, right? So I think Bitcoin is finally seeing the light. I don't know. We'll see. It's a little early to start kissing each other just yet, but it's definitely improving. Let's take a look at Ethereum. Ethereum has been absolutely abysmal for a long, long time. There's even plenty of, I saw a meme this morning just on that. But you can see the Landry light there has been ridiculous. In fact, if we take a look at, well, let's take a look at Ethereum outright. ETH. Notice the Landry light, it's just ridiculous. 60 bars, and before that, quite a few. So again, for the most part, avoid a market below the 30 EMA. I don't know who said it first, but we're talking about other moving averages, but let's just say nothing good happens below the 30 EMA. And if you take a look at even more impressive is even as bad as Bitcoin has been, if you take a look at Bitcoin to Ethereum, you'll see that Bitcoin has done exceptionally well. Look at the Landry light here, okay? Mostly green for a long, long time. It went green back here and stayed green, and look what the market has done since. The market has had the mother of all runs based on Bitcoin to Ethereum. Now, it's normally Ethereum to Bitcoin, so just the opposite, obviously. But look at the, so this means Ethereum is dropping and Bitcoin is headed higher based on the ratio. But maybe Bitcoin can also not be dropping as much as Ethereum too. Anyway, it's always interesting to look at. Now, as I've said quite often, in an inefficient market like the shit coins, okay, sometimes you could just go in and buy the strongest pairs, okay, but make sure you have some technical analysis behind you when you do that. But sometimes as they're making brand new highs, you can actually go in and buy them. Now you can see that the crypto is beginning to wake up in here, so we could see a bull market here. And keep in mind, don't get too excited because a bull market in crypto lasts a day sometimes or two, okay? But now that Bitcoin is beginning to improve, Bitcoin's your bellwether there. Some of these shit coins will follow suit. Like this looks kind of interesting. If you just wanted to go in and buy something because it's going up, right? Might be a little early. I'd prefer if it was banging out some brand new highs. But this looks like something that's waking up. That was what, AERO. But as you can see, some of these are doing okay. Some of these have bottomed out. So I'm going to have to start paying more careful attention to these shit coins because it looks like they're beginning to wake up a little bit. All right, let's shift gears and go to stocks. And I'm just going to do a brief market update. And if you guys want to talk about any individual setups, any stocks that you might like at the moment, let me know. We'll take a look at them. Now, the bottom line with stocks, let's take a look at the P's and L first, I guess, before I get to that. But the bottom line is most are headed lower, okay? Throw a dart is what I've been saying quite a bit. S&P 500, okay day so far. There's your death cross. Okay, so death cross happened right there. Let's make sure the 50 is less than, yeah, okay. So that was on the 14th. We had the death cross. So let's see. Yeah, Jeff, we'll take a look at that. Let's see, make a mental note of that or an actual note of that. Let's see what the magnitude or the diaper change moment, so to speak, is before the moving averages cross back up, before we have the golden cross. But anyway, it's hard for me to get excited about a market that looks like this. You got a big old fat thrust down, you got a big old retrace up, and we're not even above the 30 yet. Now I know we got to the 30, okay, but we're not even above it. I haven't stayed above it just yet. So it's hard for me to get excited about a market that looks like that. Bigger picture, that looks pretty ugly, okay? But we'll have to wait and see. And trend following is not trend predicting, and people get confused with that. And when they get confused, I say, look at the words, trend following, okay? So we're following the trend lower, and at some point that trend's going to end, the market's going to go right back up, right? Technically, eventually, right? Might take 25 years, but yeah, it'll go back up. We hope. Anyway, NASDAQ composite actually right above that 30. So that's, I wouldn't start kissing each other just yet, though. So far, it too just looks like a pullback. And so far, it's looking fairly ugly. The Rusty has been the ugliest of them of all for quite some time. And again, so far, it's just pulling back a little bit. And these markets have barely gotten to the 30. So there's not a whole lot to get excited about just yet, just because we had a little bit of rally. Media's all over the place with this stuff, and it's like they have no idea how markets work. Anywho, gold, the commodity, again, one of the only areas out there that glitters is gold. It's a Burrow Lives market. Silver and gold. Anyway, decent day of gold today so far. Longer term uptrend in place. The moving averages are pointed higher. You got uptrend proper order. And take a look at the Landry light on the 50, Landry light on the 30 EMA, and other EMAs. And you've had Landry light longer term on a 200 simple moving average going all the way back to 2023. Okay. This is a testament for trend following right here. Okay. When it works, there's nothing better. And the only way to make money in the market is to capture a trend. Unfortunately, it doesn't always work this well, obviously. If it did, you'd never see my fat ass again. Actually, if it did, then there'd be no more markets. Gold stocks have been looking a little bit better than gold in general. Or I should say, at least a while back, gold was looking better than gold stocks. Now gold stocks have caught up. Gold stocks have leverage. If you think about it, let's say their cost to produce gold is $2,000 an ounce, and gold goes up to $3,000 an ounce. Well, as long as their costs don't really go up too much, or maybe just slightly incrementally, they now make 50% more per ounce of gold they mine. So all of a sudden, because they're extremely leveraged in this whole process, they have the potential to make a lot more, a gold stock that is, than the move in the underlying commodity. So that's kind of an interesting type of phenomenon that can happen. As I've been saying again ad nauseum, throw a dart. Most areas look pretty ugly. There's broker dealer, health services, healthcare. Now the fence has snapped right back. Now it's hard to rush out and trade a market like this. Kind of wide and loose, sold off hard, but it snapped back. I wouldn't get too excited about that just yet, but hey, if it goes on to make new highs, we'll certainly pay attention. Transports led mostly by the jets, or the jets are the worst of the bunch there. Pretty serious slide in the jets. So far just pulling back, and now we have the tacos. There too. Again, throw a dart. Retail so far just pulling back. Longer term downtrend remains intact. So the short side remains a side to play for now, at least. Crude oil, the commodity, so far just pulling back again. Recent breakdown there. Oh, before I forget, silver's actually woken up again, so that's kind of cool. Now, it's all over the place. I wouldn't rush out and buy it, but this is good news for the silver owners and the silver stocks. So possibly we could see some setups in the silvers too. Just one more sector and we'll wrap it up. And then I do want to look at the dollar. Semiconductor so far still in a downtrend, but decent day today. So far just pulling back though, so I wouldn't get too excited there just yet. Let's take a look at the dollar real quick. I'll just punch it in. Dollar is looking ugly. Now keep in mind, intermarket technical analysis begins to play a little bit here. As the dollar drops, it's going to help commodity prices go higher, okay? And that's helping gold in part, okay? So it's almost like I sound like Mr. Mackey. Good. I haven't watched South Park in a long time. I think I stopped watching it when I got married because, my wife had a child, and you can't watch South Park with a child around. Anyway, but dollar down, gold up. That's an intermarket relationships. One of my clients, the guy's been around since the 70s. Again, you can learn from these guys that have been around. Was basically saying that the weak dollar is putting pressure on bonds. And that makes sense because if you're a foreign entity investing in bonds, US bonds, which usually are a decent investment for them, usually, and the dollar is dropping, then those bonds, then you're losing money on the currency basis. So that's not a good thing. There's a fancy name for that. Anybody know the fancy name for when you're losing money on the currency in your foreign investment? I don't know. But so that's certainly not a good thing for now. The dollar, again, has been super, super, super weak throughout this whole mess. Take a look at like the euro. Euro has been doing really well. Ditto for the pound, which is right there, I think. You can see headed higher so far. All right, Jeff wants to know about short CVX. That's going to be Chevron. And yeah. Now, ideally on the short side, like if you take a look at like if you take a look at all the shorts, CCL, TP, was it TPI? Nope. TPL? Already forgotten what stock that was. JBL was one of them. All of these stocks we shorted recently, you can see we're just coming off of these multi-year highs, or in most cases, I think all-time highs. So that's the best time to get short. Unfortunately, if the market drags lower, you're not going to have as many stocks coming off all-time highs. But Chevron looks like it's at relatively high levels. So yeah, that looks like it's okay as a short. It's a little wide and loose. These energy stocks, gold stocks and all can be a little wide and loose. I'm wondering if on a bounce in the energies, if we could get something a little cleaner. But yeah, I certainly can't argue with that because that's a stock that looks like it's in a lot of trouble. I just wish it was a little less wide and loose. Do you have any other shorts on your radar and energies we could take a look at real quick? Yeah, the big players are probably not going to be as, maybe all service stocks. See, the problem with all service is, obviously they're all over the place, but it looks like they've cracked so long ago, you're not going to find those that are just beginning to crack at high levels. All right, any more? Let me check in with YouTube real quick. Poor guys over here. All right, looks like they're kind of quiet. Okay, anything else? Well, obviously, while we're in impasse, I want to thank all you guys and girls for attending. I appreciate taking time out of busy schedules to be here. Easy for me to say. Anything unanswered, Dave@DaveLandry.com. If we don't talk between now and then, I'm sure I'll talk to most of you guys and girls on Facebook. But everyone have a great weekend. Hope to see you again next week, and may the trend be with you. Thank you so much. You're welcome.